afternoon. It's about 1 p.m. New York time on Wednesday, February 1st. And wanted to make a quick video. We are about 1 hour away from probably one of the bigger events, probably if not the biggest event of the month. Certainly it's always a big event, is the FOMC rate decision. This is the Federal Reserve's decision that they come out with every quarter. Here it is right here on the Forex Factory calendar. This is always a volatile event, and for an afternoon New York session event, probably the biggest one that you'll see. Now, so I'd like to talk to you really quick just about both from an Elliott Wave technical analysis and from a fundamental analysis, because I trade both. I think anybody that says that you completely ignore fundamentals, you're only seeing half the picture. Honestly, fundamentals do matter. Economic and sentiment and underlying fundamental central bank policy definitely drives prices. So anyways, that's a whole nother story for another day. But anyway, so in terms of the let's talk about the sentiment and the fundamentals. So the sentiment, kind of more the short term for the dollar, say like this week, is overall been positive. We had some really higher than unexpected ADP non-farm employment change earlier this morning. Came out at 246,000. The expected 165, although the previous month was downgraded a little bit. ISM manufacturing was positive. Crude oil inventories were high. We had earlier in the week we had the positive PCE data, which is they have this as yellow, orange level, but it's pretty important news. The only thing we had negative was this Chicago PMI and employee cost index, but to me those are not really important measures anyways. The market really didn't take to those too well. So and we also had Donald Trump kind of jawboning some currencies stuff yesterday. In particular, put the dollar on its back foot a little bit when he was basically throwing some darts at China and Japan about their currency devaluation. But I would say overall, especially today, the sentiment is neutral to positive on the dollar. And from a longer term standpoint, it's bullish. I mean, the employment numbers have been decent. The Federal Reserve did raise rates at their last meeting. They are not expected to change it today, but they are expected to have at least a couple more rate increases this year, which should be bullish for the dollar if those come out. Now, normally at 2 o'clock when this comes out, you get the raw number that comes out, which again is not expected to change. They're expected to keep the rate the same, and that's indicated on here. Okay, right here. And normally they have a press conference. They put out a statement and then a press conference. Janet Yellen will have a press conference and answer reporter questions, and that always creates more volatility. They're not having a press conference today. Okay, they will be putting out a statement, and the fact that they're not going to have a press conference, meaning there's probably not a lot changed. They probably will tweak some of the stuff. So the statement really will be the key. If they tweak anything to make it more dovish, then you'll see the dollar under pressure. If they continue the line they've been holding, then overall it should support the dollar to at least being neutral. Okay, so I would say neutral to positive to the dollar as far as the underlying sentiment, and the fundamentals I think are longer term are positive. Okay, so with that in mind, let's go look at the charts here for a minute. So this is the U.S. dollar index. So I don't trade this, but just for the purpose of analysis, sometimes this is easier to look at than say the U.S. Swiss, because it only really encapsulates the dollar. So this is the hourly chart, and so let's zoom out a little bit here. On the 12-hour chart, we had this big up move. So some of the theory is that, look, this has been a correction down, and now we're going to, we've reached a bottom, we're going to turn back up again. But, honestly, until if and when this upper wedge, upper trend line is taken out, to me, this is still just, moving inside this channel. course, this is a big channel. This is a 12-hour chart. If you go down to the hourly chart, you know, from an Elliott Wave standpoint, you know, earlier maybe I was thinking that this was the end of this downtrend. Maybe this was the last move down, and now we're going to turn back up. But I'm not so sure. I mean, again, guys, like I always tell you, do not take any trades based on anything I'm telling you, okay? This is strictly for informational, illustrative purpose. Use your own judgment. You know, use your own judgment and decide for yourself. You know, it just gives you something else to think about, maybe, based on your own analysis. But this right here, to me, is looking more like an ABC correction. But, I mean, it still could go up. Here we are on the 15-minute chart. You know, maybe leading up to the news, this goes down again and then we shoot back up. But I'm not convinced that this is not just an ABC correction, that we make another run down. So, you know, the first move up was about 40 pips if it's an ABC, and this move up was a little bit more. It's about 57 pips. So it's going to be interesting. I would feel more confident about going up if all morning this was kind of trending down and correcting sideways on the hourly chart. I mean, again, I can go down to the 15-minute chart and I see this move up, and I suppose you could say that, you know, this is a sideways correction. It goes up, down, and then maybe over the next hour we'll see this kind of drift lower. And if it does that, then certainly we could see it go up. But even if it does go down, I think maybe we'll come down and retest this low, which is about 65 pips, and then maybe it turns and that ends it, and then we see a move back up at that point. So I'd be a little bit cautious going into this. It's not a textbook setup as far as I can see in terms of an Elliott Wave analysis. I think the fundamentals are there to push it up, but I'm not sure though. And so if you go over to the US Swiss, well, actually let's look at the euro dollar first because I'm closer to it. Of course, the euro dollar is exactly opposite of the US Swiss and the dollar index. So again, from an Elliott standpoint, oh, I don't want that. 1, 2, 3, 4, 5. This is a pretty big correction down. But again, you know, so what is this? Is this going to go up again for a wave 5, or did the trend end here and then we're going to correct sideways and then the news comes out and we go straight down? You know, and this looks, of course, like the US Swiss and the dollar index, just on a higher time frame in the opposite direction. You have this rising wedge, this rising wedge. You know, and this is a bearish pattern because it was preceded by a large downtrend, and now we're moving up in basically a consolidating wedge form here. So, you know, but you don't really know how long this is going to move inside this wedge. I mean, this could keep going here. There's still plenty of room inside of here. So back on the hourly chart, you know, this is what I'm saying. You know, I just think that this isn't clear to me whether this is going to turn and go straight down now, because we could easily see this if we go down to the 15-minute chart. Again, much like the US, the dollar index in the opposite direction, that, okay, so we talking, you know, ABC, you know, ABC up and then down when the news comes out, or, you know, are we going to correct down here and the news comes out and we go up? I don't know. So, and then lastly, if we look at the US Swiss, which looks very much like the dollar index, same thing here. You know, to me, again, this looks like an ABC correction. I mean, this just doesn't look like really anything other than a correction to me. You got this move down. You've got the CCI spread out, going up, spread apart, you know, after it going down, compressed here, corrected here for the wave 2, spread apart, went down, compressed for the wave 3. Now again, we're going up, spread apart. Now this is getting very close to being an invalid Elliott Wave pattern because of the fact that wave 4 is intruding into the area of wave 1. So that's a concern too. That's a cardinal rule of Elliott. So, but you know, again, it's just the look of it. So, and again, this is just like this particular pair is just like the US dollar index Here we are back on the 15-minute. Are we just going to correct down here over the next hour and then we see this shoot up? Will we see leading into the news? We'll see downward pressure as the big traders, try to tap some liquidity and they push it down. And then the statement comes out and we see it fly high. I don't know. But again, even if, same thing here, that even if it does go down, I think, we'd probably see it come down and retest this low and then, bounce off this trend line again. And then, who knows after that? Maybe tomorrow during London, they reconsider it and send the dollar higher again. I don't know. So, bottom line is, guys, this one could be tricky. If you're going to take a trade going into this, be very cautious. You do have to have wide stop losses. This is always very volatile. You very typically get those big candles with huge wicks on both sides, and usually a nice body of the candle, but big wicks on either end. As the market whipsaws up and down, and if you put your stop too close, you're going to get whipsawed out of it. You will, and it's very frustrating. And you jump back in, you get taken out again, and you're trying to chase the market, and it's just ugly. So it's just better not to do that. So if you're going to take a trade, if you're confident, don't take it. If you're not confident, use proper risk management and position size management, and because you're going to have to give it some breathing room either way. And just see, I personally am undecided, but I'm leaning towards just standing aside on this one, because I could see a scenario either way. So, but anyways, guys, I thought I'd just throw that out there for a little food for thought. Maybe I'll make a follow-up once the statement does come out this evening or something as a follow-up, and we'll see what it ultimately ends up doing. But I'd be curious to know what you guys think. So let me know. And by the way, this platform, this is my demo account. I don't trade off of here, but the dollar index is a great thing for getting a clearer picture of the U.S. dollar versus just the U.S. Swiss. In this case, they look pretty similar, but sometimes the dollar index has a cleaner look. But my trading broker, the one I trade off of, doesn't offer that. So just in case you were wondering what that DXY is, that's the U.S. dollar index, which again looks very similar in this particular situation to the U.S. Swiss, but not always. So they're always very closely mirrored, but sometimes the dollar index is a little bit more clear in terms of the patterns. So, but anyways, so I hope that helps, guys, and like I said, be curious to know what you think. But take care, have a good rest of the day, and safe trading to you. Thanks.